Hey everyone, Sam from Liberty Bullion again today. We're going to make a quick little video for you. I get this question all the time and I don't take it personally. I know it's just curiosity. People ask me, Sam, how do you make your money as a bullion dealer? And I'll step you through it. I believe in being extremely upfront and honest with my clients about how I make my money because at the end of the day, we work on extremely thin profit margins here and the client is the real winner out of the whole scenario. So I'll step that through why. So, how do I make my money? Well, the easy answer is that I buy the gold and silver for one price, I put a slight profit margin on there, and then I sell it for a slightly higher price to you. So I'll step through what that looks like. Let's say today that you're buying a 1 ounce gold bar from me. Awesome. A 1 ounce gold bar today is about $5,250 Australian, give or take. So, what does that look like for me? Well, I charge the spot price of gold plus $50 per ounce for a 1 ounce gold bar. So you're going to pay $50 over the spot price to buy that 1 ounce gold bar. And if you were to turn around to me on the same day, I would pay you the spot price. I mean, look, you can sell it to me on any day and I'll pay you the spot price. But the point is that you would get the spot price back. And you've paid spot plus 50 to buy it, you get spot on the way out. Your transaction cost in that whole scenario is $50. Now, people ask me, Sam, does that mean you make $50 per ounce? I wish I made $50 per ounce for gold. I'll step through why. When I buy the gold from the refinery or the manufacturer, I don't pay the spot price. I wish I did. I pay over the spot price. For 1 ounce gold bars, I pay $25 per ounce over the spot price. So that $50 profit that we had at the beginning, the all $50 transaction cost, only half of that goes to me in profit. Now keep in mind, guys, I have employees that I've got to pay wages for, I have rent that I have to pay, I have insurance costs which are quite large in the bullion industry given the value that we're working with, shipping costs, they just keep adding up. I could go for hours. Point being that $25 profit per ounce of gold doesn't necessarily end up in my pocket, but it is the business's gross profit on the transaction. So $25 profit on a $5,250 product, we're talking less than 0.5% in profit margin for me. So that's why I can be so upfront and honest with my clients, is that 0.5%, $25 per ounce profit, I don't think I'm making too much money there. Now, how does that work? How do I run a business, pay staff, employees, wages, rent, insurance? How does that all work? The answer is on scale, on volume. When I sell, say, 100 ounces of gold for the day or the week or whatever that may be, well, that's 100 times 25, which is $2,500. All of a sudden, I can start to pay a few wages. But keep in mind, guys, that 100 ounces of gold is $525,000 today. You've got to sell a lot of gold to make $2.5 grand. So that's how I make my money as a business, is transaction costs or transaction fees. I need transactions to turn a dollar, to make a profit. So that's how we make our money as a bullion dealer, is that every time a client buys product with us, we make a small clip on it, and that works out over lots and lots of transactions and huge dollar values to be a nice profit at the end of the month. I have a saying in this game, which is, if somebody's looking at becoming a bullion dealer, fantastic, all the power to you. But if you can't sell $1 million of product every month, you're better off working at McDonald's. And that's the honest reality of being a bullion dealer. You need to sell huge quantities of bullion in order to make a profit. Now, it's going back to that statement I made at the beginning of the video. Why is the client the real winner here rather than me? You think, Sam, your whole business is based around selling bullion. Why does the client profit more than you do? Answer time. I make, as we've just stepped out, 0.5% when I sell a 1 ounce gold bar, which is our most common gold product that we sell here, a 1 ounce gold bar. Now, the client, if they bought that with me at the beginning of last year, would have seen a 40% increase in the price of gold and then another 20% increase this year in the price of gold. So they would have purchased the gold with me for around $3,000 an ounce, and today they'd be able to get $5,200 per ounce for their gold. So that's a profit of $2,200 per ounce of gold that they've bought with me. Whereas keep in mind, guys, I'm making $25 per ounce. So who's the real winner here? The client, who's up $2,500 per ounce on their gold, or me, who's making 25 bucks? So that's how we make our money as a bullion dealer. On large transaction volumes is how we pay our bills. And that's why the client is the real winner here, not me. Thanks, everyone.